All right, bet. So all we're gonna do right now is just we're gonna go over basic, market conditions, what days are good, what days are bad. Um, so if you're looking for today's price action, right? So this is 9:30 open, right? So we're just gonna mark this out. We're gonna mark out. This is where market opened right here, and then this is where market's at right now. So I want you to see how rangy it is, right? We're not really moving anywhere. We're displaced. We start to chop. So we're not really displacing anywhere towards any lows or anything, right? So with a good example, I want to show you yesterday's price action. So remember this, look at this, and then I want to show you this, which was yesterday. So this was 9:30 open, right here, and then this was where we're at right now. So you see how we're displacing. So this is the same time as what we're at right now, which is 10:50, right? So from 9:30 to 10:50, we actually were displacing in one direction. You know what I mean? There was actually displacement in one direction, and then once we get a pullback, we continue into that direction. You see? So that's all I want you to look up for example wise, right? On back testing, those examples. I want you to send me a few examples of when price is trending from 9:30 to 4, or it doesn't even need to be to 4, but from 9:30 to a certain point, actually trending in a single direction, and then the days where it's from 9:30 to whatever but it's just chopping. So we'll go over a couple more examples. This was Monday, so you see from 9:30 right here to, let's do 1050, right? We're actually displacing inside of into a direction, right? We're going higher, and so you can catch that by looking for price to pull back into a gap, and then, you know what I mean, look for the CISD, and then look for the continuation. Go for some more examples here. Okay, so here, a good example of bad price action, bad conditions. You see from 9:30 to, let's do 10:50. You see we're just chopping. We're not really in a displacement. We're not really showing any signs of momentum in one direction. Or even we're not even showing like a sweep and then a direction change to go higher. We're just chopping, which is a sign of bad price action. Right, and another example of how you can tell bad price action is because we're creating bearish gaps that get inversed, that get closed above, and we're creating bullish gaps that get inversed, closed below. So usually, typically, what happens is when we inverse a bearish gap, we want to see price to continue higher. If we inverse a bullish gap, we want to see price continue to go lower. On this example, we do go lower, but you see how we were just chopping the rest of the day? We just chop, 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 chop. We weren't really having some type of direction. And then Thursday of last week was pretty good, I think. Let's see, Thursday. Yeah. So just like yesterday, from 9:30, this is the 9:30 open, to look at even 10:55. Look, we're actually having a direction form, right? We're displacing in one direction. We get pullbacks. We can enter in the pullbacks to continue lower. Okay, that's literally all I want you to send me. I'll go over the rest of this week here. Let's go to Wednesday. Wednesday was pretty chopped as well. So this was the 9:30 open right here, and then we're just chopping down, not real displacement, just because we're not creating any 5-minute fair value gaps, not even 15-minute fair value gaps, which is pretty shit. But obviously you could have taken something in here, but it's just super low probability because of how choppy it is. Okay, let's go to Tuesday. Here, nice. So this is one of the examples I was just telling you, how we sweep and then we go higher in our direction. So here we dump off open, sweep some type of low to the left. It's not gonna. We sweep some type of low to the left, and then we get a direction change. Failing to go lower, we get a direction change higher, and then we can take the continuation to go price higher. So we'll just do 11 o'clock. So change the direction once we get this bullish candle, and we continue to go higher. And then Monday of last week, let's see, yeah, same exact thing. So 9:30, can mark that out till 10 or 11, whatever. Let's just do 10:50. So 10:50, you see we're displacing in one direction. Once we're displacing in one direction, all we look for is a 5 or 15-minute fair value gap to open up, and then we're just looking for the continuation out of that. So that's all I want you to send me for the examples wise. It's pretty easy. Yeah, let's get out of this. It's pretty easy. But just take a look at like what bad price action looks like. You'll get chopped up here. I actually personally got chopped up here because I thought we were gonna displace lower, but I got stuck in the chop. It was like somewhere around here. I got stuck in chop, just for price to go lower, which is fine. It happens, but you can see like this 5-minute fair value gap gets created. We inverse it. So when we inverse a fair value gap, we want to see price reverse in the opposite direction towards any liquidity above now. But you see that we inverse it, and then we fail to go higher, and then we continue to go lower, which is another sign of bad price action. Right, so if I look at this is exactly what I entered off of right here. Tap into the 5-minute gap, and then right here, tap into the 5-minute gap, nice reaction candle, stop loss, take profit, and then just got chopped up. You see there's just no delivery, chopped up for price to go lower, which sucks, but it's fine. It happens. But if you have any questions, bro, just let me know.